Corn and soybeans and higher than last week, but still a very choppy market we had. Jerry Gidel is ready to analyze, and also about the lowest cattle herd in several years. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, as you rightly predict, the week was really choppy in the markets.
Oh yes. Well, it started off with the anticipated, but yet still a very unfortunate situation where the Russians, I guess, in their mind, decided that the corridor was providing too much money potentially to the Ukrainians for armaments and things like that. So their strategy was, well, we're going to shut that down. Even the UN offering the opportunity for the Russians to utilize their favorite agricultural bank and go back to the SWIFT program didn't seem to budge their attitude about and that. And I think in retrospect, in their own minds, the retrospect was that they really wanted to knock out some of the port facility situations that had stayed together here ever since the war had begun, and so that definitely was part of the reasoning that we had this week for the Marcus being definitely highly emotional about that, and then also the longer term weather forecast started showing a significant warm up here for the Midwest. So those two things really gave us some emotional and choppy markets through the mid part of the week here on both corn and soybeans. Even wheat got into the act there on Wednesday when it really looked like that the Ukrainian wheat situation on their exports was going to be shut down, and we're really at the seasonal level on wheat right now. Post harvest, we're probably getting the 63 to 70% level here, and that once you get past 60%, that usually means you're past Kansas most of the way, and so the wheat market usually is in its post harvest mode.
Yes, and what is still key is the weather in the USA for the markets.
Oh, definitely. To mentioned in the background there, the weather situation for corn and soybeans. Now we're approaching the well, this week will most likely be over 50% on pollination, but at this point, the soybeans. The twist on them is that they can flower and blossom this time of year and then drop off because of heat and then come back in August. So they kind of creeped up on this thing, but the corn definitely responded to the potential stress. It looks like we're going to have some of our highest temperatures of the season this coming week. Now, the twist of it was at the end of the week, instead of it kind of rallying into the weekend because of the heat, there was a potential in the 10 to 14 day forecast for some moderation of temperatures and some rainfall. Not surprising in weather models, in that they tend to always are looking to be able to give us the first look on moisture, even if it's somewhat shady at this point that it's really going to happen. But that's what illuminated the kind of a normal situation, or at least in past history of weather markets. They tended to rally into the weekend, which was kind of caught a lot of people a little off guard, including myself.
Yes, and about the grain corridor deal, where do you think demand is going to now that the deal has ended?
Yeah, that is a born $1 million question at this point. A couple things. The Ukrainians during this situation really optimistic and talking with that they're going to be able to get this uh, kind of a deep sea temporary shipping point near the Danube up and going, and use that as the alternative. Now, officially Romania, along with Poland and Slovenia, are both they're the ones really complaining about the possibility of expanded Ukrainian shipments of grain into across their borders. Now, the biggest question in this whole thing is, or biggest past history of it is that unfortunately some of those shipments this last year didn't get to the export ports to go on out to the world. They kind of ended up staying in the countries that they kind of ended up railing things to, and that's definitely not the best thing. But in general, they're still fighting the concept of even opening things up here after harvest. There was originally a September 1st date. Now I think Poland and Slovenia are talking about extending it to the first of the year. That puts quite a bind in there. And even the Romanians, officially this is not. I guess it's off their shores where this is going to be, but it's not officially entering their country. So I don't know how that's going to work. But the Ukrainians have been very trying to be optimistic about how much they're going to be able to ship out there on the wheat world, and so that's definitely news in that world back and forth has also influenced the markets at different times this last week or the last few weeks, really, and so it's going to continue to be important because right now, at least, if that over the last, let's say, 12 months, they've been averaging probably in the 3 to 4 million metric tons of wheat, maybe about the same on corn, or maybe it's a little less on wheat. But anyway, that amount of wheat moving out has to, well, potentially, I think half of that's going to have to come from someplace else. And so that might end up being a positive for the U.S. Now, the twist of it is sometimes you expect the Europeans to pick up some of that, but their heat situation and dryness from Spain across southern France into Italy and on into the Balkans there is been very hot, and so there's been recent reductions in the expectations of the European Union's crop size. So that's excuse me, that's one of the factors in here that maybe has shifted to some other places. The one twist of it is that right now, while we've had some rains in the southern plains and across parts of the mid-south and the southeast, and that the Canadian crop, particularly in Alberta and parts of Saskatchewan, has really dried out, and it doesn't look like they're going to get a lot of rain. So the Canadians don't look like they're going to be able to pick things up. The Australians are trying to be optimistic. A El Nino weather pattern, though, isn't a very positive one for their production either. So some people are suggesting that the USDA 725 million export level could be too low, and they might be right. That some of that wheat that's potentially not going to be able to get out of the Black Sea here could be sourced from the U.S. But right now, we're still a little bit behind our seasonal and last year's paces. So we'll keep a close eye on these U.S. wheat exports, because right now we're really servicing the Central America areas and some of our longtime clients. We haven't really seen any significant jump in 2023-24 exports here in the U.S. for wheat.
Now, with the cattle herd number, will the U.S. hit a 52-year low? So what do you think is the impact both for the grain producer and the cattle producer?
Yes, that number that came out Friday afternoon was quite a people definitely anticipated it to be lower than the well, we're really going back to the 1970s when you're talking 52 years, and that's an amazing slippage. That was down about 2.7, something like that, 2.8% um, from last year's June 1 total. They do have inventory every 6 months, so they do one December 1st and also June 1st. Maybe it could be, I guess, every 6 months would be January. But turns out that that that's the numbers of animals that are ahead of us that potentially could come through. And right now, it's still erratic enough that there's not that many people out there going ahead and expanding their herd, which would in essence mean less placements than normal. The twist of it is, I think there was a group of feeder cattle people that were hoping that uh, this spring that the grass would end up being better and the weather would improve. We did see some improvement in some of the southwest areas in that because of the spring rains that have occurred. But there's a certain amount of probably a higher percentage actually in the northwestern parts of the plains where feeder cattle, and also there's also a pretty good amount in the southeast. And so the twist of it is that the monthly cattle on feed report was also issued on Friday. It showed a bump in placements up to 103%. Versus expectations around 97%. So in the short term, the cattle market maybe have a slide here because we're at pretty high prices. I think we're $185 in the cash price these days, which is above the previous kind of up at near the highs. If it's not actually at the highs here, we did have a little bit of a pullback here earlier this month, but right now, at least, the cattle near-term prices are going to be a little choppy, but it also means that there's going to end up being some more short-term needs for grains. Now, the one thing that normally happens here, when you bring in a feeder cattle from the plains or anywhere actually into the feed yard, you don't tend to end up putting them on corn right away. What it does mean, though, is that the forage demands, which definitely have ramped up, and there has been some better forage production this year because of the rains. But at the same time, you got to get them some further growth. You don't tend to put the high protein, high corn rations on cattle until later in the system. But right now, at least, in general, that does suggest we're going to extend our old crop demand for corn in the feeding area. The twist of it is that to some extent, last year's crop size still is somewhat of a mystery. We kind of discussed this earlier in the month when we had the stocks reports out, where abnormally high number there in disappearance through feed suggests that there was probably an overestimate of the crop, which also to me means something towards this new crop yield potential too out there in front of us. I think that's the other real twist of it here is that the potential here for the 2023 corn crop. A lot of people kind of poo-pooed the idea that that there was much impact to the corn crop while it was dry there during June, early and very early July, and I think that's in the past we've and that situation, corn ear does not totally develop and its whole potential determined during pollination. A lot of it's determined during that staging situation where it determines its length, its number of rows around, things like that. And as you're going to join us here in a couple weeks on our Central Illinois tour, that's where the meat of the old corn crop is really as much determined then as how the pollination. We are going to have some potential here for some stress on the pollination on the final 30 to 40% of the crop here with this heat. But at the same time, some of it was already determined because of the stress we had back in June.
Now, where do you think we are headed next week?
Well, I kind of feel like this market's going to react to this hot weather, and I think the other twist of it is that the soybean market has been kind of dancing along here with not really wanting to go above $15 in the spot August. I think that could provide a little bit of general. We get the emotions of the weather and that finally hit the thing. We could see the November beans also finally participating a little bit more dramatically, kind of like what happened to the wheat last week. All of a sudden it had to go through some important technical lines, some downtrend lines, and also seasonally. So that could be a big factor. The interesting twist on this now, there's been a lot of conversation about additional double crop beans being planted. I checked with some sources in the Mid-South, and they're definitely on board saying that that's going to be the case because of the fact that we've had this renewed strength in soybeans here in overall. They're not as snappy as we were last winter, but they're still pretty significant in that. And so I just put in a half a million more beans into my S&D numbers this week, and compared them to the USDA's type situation and that. And if you also at the same time, you can't really expect double crop beans to have the same yield capabilities as first crop beans, because sometimes the frost in the fall or other things that if we end up having dryness in the fall like we've had the last few years, we'll have less production there too. So the combination of half a bushel down because of weather, half a bushel down because of the double crop influences here on prices, or on production, I should say, and that I kind of see the USDA is vulnerable to see their carryover stock maybe go down here. It's going to be tricky. August is the USDA doesn't despite my talk that there's a reaction they should do. They sometimes don't do anything until they actually get their survey results. And that's the other twist of this thing. We're not having the August crop report with as much meat in as it used to be from there because of costs. But I'm looking at potentially a 240 million number versus the USDA's 300 million number as being more realistic right now than the July numbers. Similar situation on corn. Not that we're going to change a lot of plantings on corn, but this week the International Grain Council came out with an updated number, and it went up 10 million metric tons. I says, wow, wonder what. I says, it seems a little early for them to make that judgment, but they were really just reacting to the USDA's June number of 2.1 million metric ton, or 2.1 million acres corn being planted, and that. So I went back through the figures, and because of that 10 million increase, that really was reflecting the increase in acreages, and I can't say that's the case. And the twist of it is that their previous number that they were utilizing was 174.5 bushel yield. So they were ahead of the USDA's 177.5, and I think that's still a very appropriate level to use right now because of what could happen here with this heat in front of us. Also, the fact that last year's yields are not 173.5, they could be as low as 170.5, and that. So I'd have to feel like that utilizing that same number and that with on the current yields, this current level versus the current number of acres, and that I took down my carryover stock without any adjustments from the USDA down to 1.95 versus 2.26 from there. So that's an interesting twist on it. That still 1.9 is not a bullish number, relatively speaking, but it is a number that is going the right direction here versus the USDA's over 2 billion number. And but with all the uncertainties in the world that's going on here in Ukraine, still in a bind because they have been a huge contributor over the years as a corn exporter. I think that's a big factor that, we don't have to have a 1-2 number on corn to get corn bullish, but at the same time, weather and more and more information about the Black Sea will be highly important here as we go forward. This coming week, I'd encourage producers to utilize the rallies this coming week. I know that, say, oh, well, it could really knock the yield way down. It's real tough for me to anticipate a number that we're going to see on corn below this 171 leveled out here. And that's still going to, as I said, provide a lot of grain because we increased our acreages dynamically, both in planted and also harvested, and you just can't overcome those kind of scenarios here on corn. Soybeans, right now there's going to be a rebound in Argentina for sure. I don't know if Brazil's going to have the greatest crop next year, but it's still going to be adequate by any means. So these are the time of the year when you kind of clean out the old crop and get that 30 to 40%, 50 of new crop sales locked up as we go into the fall, and then we'll see how things go during the month of August.
All right, thank you very much.
Have a good weekend, sir. So we'll looking forward to see you and some other people out here on our Central Illinois crop tour here on August 5th.